Okay guys, so today we'll be talking about liquidity and imbalances. So as you guys should know, I think I stated in the last video that liquidity rests above old highs and below old lows. So right now in this market, you can see price dropped heavily. When was this again? It was this morning. Yeah, this morning at 6 a.m. price began to drop, and 7 dropped below these lows. So as you can see, the liquidity here was purged, right? So price ran above here, took the buy side liquidity, which rested above this old high and this old high, which that makes them, waiting for someone to type it in the chat, but no one is, relatively equal highs, right? So price went above that. I remember when price was trading around here on Twitter, I stated that if you're holding cryptocurrency, you should take profits, right? I think you guys, most of you guys should have seen that. Most of you guys did. I was anticipating price to drop, which is why I said take profits, right? Because price ran above these highs, right? There's a lot of liquidity here. There was this high, and this high. And when you have highs like this right now, this is important. When you have three relatively equal highs, but going to the left, you have this one lower than this one, and then this one lower than this one. So you would have something like this, right? And I know that people are going to take this and create their own courses and whatnot, but I don't care. This is nothing, right? So when you have like highs that looks like this, one, two, three, and then you have price go above, as 1, 2, 3 did right here. This is better than price just going above like one. This right here is better than if price just went above this one alone, right? Like this is confluence. Like they were really pushing price above to get the liquidity above all three highs. And first of all, this was deliberately left before the fact, right? So even when price was here, to me it was obvious that price wanted to go below these lows, but due to the fact that it was trapped within this range, I wanted to see price go above here first, right? So we had price run above here, get the buy side liquidity, remember what I just taught you, right? Like, we'll talk about this later. This is like, introduction, no really advanced, really advanced stuff. Like, as we go along, we'll dig deeper into everything, but I gotta give you guys the technical pieces, the visual pieces, things that you can just see easily that will enhance your trading or your ability to, know where price will go. So yes, back to here. Price went above here, dropped, went back up, and then, as I was anticipating, it dug below this low. And again, you can see that we have the same pattern right here, but in the opposite. So we have this lower, this low higher than this one, and then this low higher than this one, right? I think ICT calls this trendline liquidity. Yes, that's what it is. So, in my experience, I rather to see this trendline liquidity than equal lows. I think that this attracts price more, and it's low resistance liquidity, right? So price will not have a hard time to break through it, push through it, or anything like that. All right, so this is it. So for those that are new, buy side liquidity is any high that is above current price. So right here, this is buy side liquidity. This high right here, this is buy side liquidity, and vice versa for sell side liquidity, right? Sell side is any low that is below current price. That's what sell side is, any low at all. So if we do this and we come here, this is sell side. This is a whole lot of sell side down here, right? This is sell side liquidity. This high right here is buy side liquidity. This low, sell side. So any high above current price is buy side. And someone's asking if it's going to be recorded. Yes, it is being recorded. Don't worry. Where was I? So any high above current price is buy side liquidity, and any low below current price is sell side liquidity, right? If you're new, please understand this is very important. It's not like you can't trade with this alone, obviously. This will not help you alone by just knowing that highs and lows, that won't help you alone, but you must know this. This is the basic thing that you have to know, right? We're going to build on this as we go along. Okay, so I think you guys should have a good idea about buy side liquidity and sell side liquidity now. Now we'll look at the different types of imbalances. So all of the imbalances are someone says that this is slightly out of focus. Is it okay? Do I need to do something? Hope that it's not. Okay. Okay, good. Okay, so don't worry. After this year, I'm sure that some of you are gonna get something that you can actually go into your charts, look for, work with, and yeah. So this right here is a fair value gap. This is the basics, guys. Don't worry. I know some of you are really advanced. I know that. Charter students, I know you're really advanced. Don't worry. We'll get to that stuff that will make your head hurt. Just don't worry. We gotta start slow. This is like the first real video that we're making. Don't worry. And there'll be more. Okay, so this is a fair value gap, right? I'm pretty sure you can see the gap right here. You have the low of this candle right here. I'm trying to make it easy to explain. So you have the low of this candle. It's a 3 candlestick pattern, right? So the candlestick to the right and the left of the candlestick in the middle, the high of this wick to the right should not be overlapping with the low of the wick to the left right here, right? So you can see that this forms a gap. Very easy to see, right? This forms a gap right here. So this is a basic fair value gap. This alone will not help you. It will not, right? But you have to know how these patterns look, because after, we go through this and you know what to look for. You go in your charts, you label them, you can send me your charts and I'll tell you if you label them correctly. MSH, yeah. Don't worry, guys. Some people here, they need this, and it hasn't started yet. Don't worry. Nothing advanced as yet. Right, so this right here, that's the fair value gap, right? And then you have something that's even better than the fair value gap, but it is an imbalance, right? We have the balanced price range. So in my experience, the balanced price range works way better than a regular fair value gap. Like, I would say, if I could just trade with one inefficiency, it would just be this. So a balanced price range is where you have 2 fair value gaps overlap one another, right? You have like this one right here. See, the low of the candle to the left, the wick is not overlapping with the one right here. So the candlestick in the middle has no wicks overlapping, right? So this fair value gap, you draw it out in time. There's another fair value gap right here. High of this candle, low of this candle, not overlapping. You see the imbalance right here. The only thing right here is, only thing that happened in this candle was buying, right? So I think this works as how, we would expect a order block to work, which doesn't really work most of the time. So, I'm going to be honest with you. Most of you know you've been trying, and yeah, that's why you're here. So this is a balanced price range, right? When the fair value gaps overlap with each other. This is the best imbalance to use, right? You could literally just forget about the regular fair value gap. You could literally forget about the one that I'm going to talk about next, and you could just use this. Okay, and next we're going to go for a inverse fair value gap. Let's see. So this, what are you guys saying? Don't worry guys, the video just started, man. Have a little bit of patience. Come on. You can't rush it. Okay, so this right here would be an example of what an inverse fair value gap is. Hold on. I lost that one, so I'll just use this one. This is an example of what an inverse fair value gap would be. Right? So these fair value gaps, you can literally draw them through candles, you can draw them through wicks, whatever it may be, right? So you have, the regular fair value gap, all the way over here. Regular fair value gap that you guys know about, drawn out in time, boom, right? Yeah, it looks like hindsight now. We will get to the real time stuff soon. I just want you guys to see what you should be looking for, right? So this one is not as important as the balance price ranges, and it's not as important as the regular fair value gap is. But yeah, so here it is, inverse fair value gap drawn out, price digs into it and then drop. Okay, so now we're going to talk about time, and we'll go over this again the next time we talk in more detail, but now I just got to get your brains thinking, if you understand what I'm trying to say, right? I don't want to overwhelm you and then have you guys arguing that it's too hard or that you're not learning, right? Someone said it looks exactly as what I said at balance price ranges. No, it's not. Let me try to explain again. Okay, I'm happy that you guys are here so we can talk about this. This right here this is a balance price range, right? probably easier to understand right here. You have two imbalances. You have two imbalances, and they both the fair value gaps. The fair value gap to the left goes through the other. So this is what a balanced price range is. You have two fair value gaps overlapping, right? This now is basically a double FVG. This right here is a regular fair value gap. See, just one. This one is two. This is one. So this is a balanced price range. Hold on, let me fix this. Okay. And inverse fair value gap would be something like this. No gap here, but a gap right here. There's a fair value gap behind this one, as you can see. So a balanced price range is two FVGs overlapping with each other. That's a balanced price range. Okay, and this, what I'm talking about now, will be the important one. So I'm going to talk about time now. All right, when looking for setups, or when you're back testing or tape reading, you will always prioritize imbalances over highs and lows. I'll say that one more time. When you need to find a setup, the base of your setup will be an imbalance. What do I mean by that? I'll show you right now. Here you can see that I am on the monthly time frame, and you can set up the times, the time intervals, as I have it here. If you want, you don't have to add 30 seconds. That's not important, right? 1 minute, 5, 15, 1 hour, 4 hour, daily, weekly, monthly. You can just use this. You can ignore these two if you wish, right? So you need these. These will be the go-to time frames for you. The monthly, the weekly, the daily, the 4 hour, the 1 hour, the 15 minute, the 5 minute, and the 1 minute. And you want to have them in this order so it's very easy to see. Right. So when you're going to a setup, you need, as the base of the setup, you need an imbalance, right? So the imbalance right here would be a fair value gap. make it red so it's easier to see. This is a fair value gap, right? This will be the base of your setup. So when before this candle trades here, when it's open and it's just gyrating between the high and the low of this one, you'll be anticipating price to trade back into this fair value gap if you are bullish, right? So this is the base of your setup. Why is the time interval important? Because if you set up your time intervals like this, you can just look for a fair value gap on your monthly time frame, then you skip the one to the left, and you go to your daily, and that's where you would look for an old low, which is above or within the monthly fair value gap, but above the center or consequent encroachment, right? So this would be your higher time frame base for the setup, a fair value gap, an inefficiency, an imbalance, right? This is how the algorithm sees price. This is how it reacts. This is how it key off levels, right? So you go back, skip the weekly time frame, and you go to the daily. So as we can see right here, price dropped below this low, which is an old daily low, which is directly above a monthly fair value gap. This is the same level, the same monthly level that we just marked out. Okay, the same monthly level. We just skipped the weekly to the daily, and if this was a daily time frame, you would just skip the 4 hour and look for a higher low on the 1 hour time frame. Hopefully I'm making this easy to understand. Is anyone having problems? Do you have any questions? Do you need me to? Are you guys following? Hopefully you are. So and we are gonna have another video for time frame alignment. Don't worry about that. For time sequence, don't worry about that. But this is a way that will make it easy for you, as you can see. So if say you want to trade with the 15-minute time frame, you want to trade on this time frame, then you're gonna just go forward, skip time frame ahead of that, the 1 hour time frame, and then you have to find a 4 hour imbalance, right? Of course, we need a video about time frame alignment to understand more. Of course, yeah, you guys will understand more. I can't say everything in the first video, right? It'll be too long. So this right here alone is very powerful. Like this is what turtle soup is, right? This is turtle soup. Price trades below an old low into a higher time frame imbalance. Then look how explosive it was after, right? Even I remember down here we were on Twitter, we wanted to see higher prices, and then went there. So yeah, if you follow this simple procedure, you will, more times than not, be on the right side of the market, right? So what we had right here is price traded into internal liquidity, and then rushed for these highs, which is buy side liquidity, external liquidity. So price will not, you won't see price reacting like this after breaking old lows or old highs unless there is a higher time frame level to key off of. Most times, if you see this right here, like price run above this one, no imbalance right here, then drop, that's usually a fake move. And these highs will be revisited as they were here, right? So like here, for example, there was no imbalance right here that caused price to drop. This was just a false move, right? So price drop, everyone's charting, think it's gonna go lower, then it just explodes, right? And then you have trendline liquidity right here, just lower than this one, and this lower than this one. Perfect. No imbalance that caused price to drop. Very suspect. You don't trust that. Right. So anytime you're looking at price action, you see stuff like this happen. Price went above a high and drops. You can expect. Don't treat price breaking this low as a shift in market structure or anything like that. Just you need to treat this low as a buying opportunity when price drops below it, right? Whereas there's a higher time frame imbalance right here. So for those who did not get when I referred to these up here, if you're trading with the 1 minute time frame, you're going to need a 15-minute imbalance. So if you're a scalper, you like the 1 minute time frame, you're going to need a 15-minute imbalance, right? And you would be looking for 1 minute old lows, right? Old lows or highs above the 15-minute imbalance, right? And the same goes for if you're trading with a 5-minute. If you're trading with a 5-minute time frame, you need a 1 hour imbalance. If you're trading with the daily, say you're trading with a daily time frame, you need a monthly imbalance. Right? $15-minute. I've talked about this stuff before, but I know that it goes over some of you guys' head. So, gotta do it again. Gotta try my best to make you understand. There's certain things that you will learn probably end of this month, next month, and they all have prerequisites, right? You need to understand the basics before you understand those, and you can't rush it. You can't just learn everything in one video or two videos, right? You gotta give yourself time. You gotta make the knowledge soak. You gotta go in your charts and look for these things happening, repeating, right? And you'll see that this is the truth. So yes, so you got, if you're trading with a 1 minute time frame, price goes below a 1 minute low and then it trades into a 15-minute imbalance at the same time. You see, that sounds a little bit confusing, doesn't it? So if I didn't show you guys all of the, what I just showed you, the basics, and what you're looking for, an imbalance of your value gap, old lows, old highs, buy-side liquidity, sell-side liquidity, then this would seem like gibberish. Okay. Of course, after it will be recorded, you can fast forward, you can skip, whatever you'd like. So yes, this is the sequence that that the algorithm refers to, right? 1 minute lows, 15-minute imbalances. No, 1 minute high or low, 15-minute imbalance. 5 minute high or low, 1 hour imbalance. 15-minute high or low, 4 hour imbalance. 1 hour high or low, daily imbalance. Then we go on 4 hour high or low, weekly imbalance, daily time frame high or low, monthly imbalance. Hopefully you guys got this. This will be very important to your development. Yes, someone asks, yes, the 15-second time frame. Yeah, for a 15-second time frame, you need a 1 minute imbalance, but you don't need to focus on that right now. Well, if you're already advanced, then yeah, you can. But if you're new, it's better to use like the 15-minute and the 5-minute time frame to trade. Even the 1 minute is not bad, but yeah. Okay, let's talk a little bit more about time. So I'll give you guys the best time to trade. Right, the best time to trade is 9 to 10 a.m. in the morning. New York session. 9 to 10 a.m. in the morning, New York session. That's the best window of time. Like 70% of the time you'll find something there to do. Someone asked me to explain Taylor Soup again. Don't worry, after the video is over, you can rewatch it as many times as you want. It's being recorded and it'll be saved. Where was I? Okay, so 9 to 10:30 is the best time to trade. 9 to 10:30 in the morning. I'll say it again, 9 to 10:30 in the morning. You can just trade 9 to 10:30 in the morning, and you'll be good for the rest of your life with just that period of time. You don't need more time than that, right? So if you're trying to backtest, you're trying to study price, that will be the best time to tape read. And I'll be tape reading some of the times with you guys live, telling where it should go, where it shouldn't go, and stuff like that. Yes, I'll be going over breakaway gaps at some point, but it's not necessary right now. There's a lot of stuff that we're going to go through, right? Yeah, and eventually we'll be trading live when you guys have acquired, don't worry, all of that will be done. Right now is not the time to be trading, right? And I'll go over the markets with you guys right now so you can see what I'm talking about. Let's look at NQ. So before we had this fall on Twitter, I talked about prior to this that this was probable. Okay, so where price is right now, it's nowhere that I would say is actionable, right? So I would need to wait for more information before I did anything at all right here. There's nothing to do right here. Nothing at all. Right. Next month, February, we should see price begin to, align to the downside as the seasonal tendency kicks in and another quarterly shift takes place, right? The last quarter of the shift happened down here, right? Around, I would say, 2 months ago or so, or a little bit over that, right? Every 3 to 4 months, the market changes direction, as I've said before, and we'll go over that in detail as well. So right here, nothing much, right? I am not bullish. Like currently, I am not bullish on the stock market. I am not bullish on cryptocurrency at all. I'm not bullish on Euro USD, GBP USD. Nothing of that nature. But there is nothing that I can work with, I can use to frame a setup right now. Maybe if I'm on the micro time frames. Then I could find something like the 15-second, 1 minute time frame. But now if I go to trade with the 1 hour time frame, then there really is not anything to trade right now. You can see all of this back and forth. Nothing here that makes sense, really, right? You don't. So I will do this so you guys can see. Okay. So we need 60 bars, which will be 3 months. Right. So here is where we would start looking for price to change direction and head towards, the inefficiencies here, this low, this potentially. But yeah, so time is the most important part of this, right? You always hear me say that the candlesticks are not important because the time dictates what the candlesticks do. So as you can see, like if you look back this point, this was the major low that catapulted price up. This was the last quarterly shift. And the next one, which will be around here, probably around February, give or take a few days. When price gets to this point, we should be seeing immense selling pressure. So we'll be shorting every breaker, we'll be shorting every fair value gap, we'll be shorting above every old high, stuff like that. During the month of January, the market usually either just consolidates or just try to get out to, the weak traders, everyone that came in the new year saying that they're going to be a trader now, they're going to learn how to trade, and they just rush into the market with no experience, right? So that's the purpose of January, which is why my mentor ICT says that he doesn't trade January. That is exactly why, right? It's the second least probable month of the year to trade, right? It's very difficult. You can trade on the lower time frames, of course, but like finding a bias on like the daily time frame will be very hard. As you can see right here, we don't really have any framework to work with. So that's it for futures. Go to DXY. Okay, so during the next quarterly shift or the rest of the year, I think that we'll see these highs get taken. I have to wait until I get more information first, but yeah. So like we have this high right here, the current range, and we have this low. We have a fair value gap here. I'd like to see price stay below this and gyrate a bit here or sweep this low before going towards here, as it's not yet time for it to do so, or even if it goes above that, it gyrates below this low. This is the weekly time frame, right? So this is a fair value gap. We have liquidity here and we have liquidity here. If we see price trade above this high, this low, that would set up moves within the forex market, the crypto market, and the forex and the futures market. So as you can see, weekly fair value gap. We go down to the 4-hour fair value gap, and you can see price rejecting from this imbalance right here in real time after doing what I just told you guys about going above this old high. Can you guys hear? Is the audio okay? Okay, good. So when the next quarter the shift kicks into place, then we'll be shorting EU, GU, and looking for DXY to make higher highs. On the daily time frame, we are stuck between this daily volume imbalance and this fair value gap. There is no clear read on price right now. No clear read at all. Like, I am not in the markets right now trading or looking for moves or anything. The last thing that the video is lagging. Okay, so the last thing I really looked at is Bitcoin, because like that drop was obvious. But right now, the markets are not primed to be high probability. This will change within like the last week of January, the beginning of February. This is like what usually happens every year. Don't be in a rush. If you're in a rush, you're going to be knocking your head on a brick wall, right? Gotta stay calm and be calculated with your decisions. Yeah, I was already working on this one. There we got EU. So I'd say the yearly drawn liquidity it's going to be probably down here. This one for sure. We'll probably need to run some buy side. Leave an SMT between either this and GU or this and DXY, and then we'll continue lower. Price will be way easier to read after next month. Wow, we've been talking for 57 minutes already. Amazing. SMT is not more important if it happens between DXY or GU in terms of trading in regards to Euro USD. I think Yes, sir. I will touch more on quarterly theory, of course. Quarterly theory. What a wonderful name. Today was just about getting you guys to understand inefficiencies and liquidity. That's it. And giving you guys the right time frames to frame setups. How many videos there'll be per week? There'll be 2 to 3. I think I'm gonna be closing this one off soon. I can't believe that I've been talking for almost an hour. Hopefully you guys learned something. Please, if you have questions about anything, if you need if you need me to explain anything in more detail, then you guys have my contact me. I respond to you guys. I don't respond to anyone else. It's recorded, don't worry, Sam. And I went over a lot of things in this live stream. A lot of things. So please pay attention. Today is Wednesday. There will be 2 to 3 live streams per week, sometimes 4. Don't worry, this is the first live stream. Well, yeah, the first live stream of the year. Sometimes I'll probably be here on weekends too, don't worry. And I'll probably, if I'm not here Friday, I will be here Saturday. So yeah, if you have any questions, if you got any feedback that could make the streams better, then please let me know. Also, I'll be dropping a few videos when I think it's time, when you guys have gained enough, understanding of price action. Please, send your charts in the group so I can see how you guys are growing. And yeah, I hope you guys have a good day. I think I overstayed my time. It's been talking for an hour now. And have a good day. And I'll see you guys soon.